Hello investors and traders, today I'll speak about the stock market. The main index is AT&T, of course, the interest rate in the stock market. So let's start usually with S&P 500. So in my mind here, we still are in a elevated interest rate environment. I remind you the Fed fund rate now is 5%. So here my main scenario using the Elliott wave is that we are in a correction. So it was the first, the second, the third, the fourth, and I'm waiting for another move down. So I'm expecting to see the fifth wave here. Actually, here a very strong support level is 3,800. So when we break this level, we may see acceleration in a down move. So but before now I'm not heavily buying stocks. It's for me it's very hard and very difficult. I can't afford it to myself because of course the interest rates now in the US, in the whole world, are very high. So also there is also a problem with liquidity in the stock market. So generally speaking, it's my view for S&P, and I'm expecting to see this index a little bit lower towards the end of this year. Let's move to Nasdaq. So the IT companies index. So here we see that we have more than 12% at this year. Here there is few support level. It's 11,000, 10,000, but generally speaking, I'm also would like to buy such nice stocks like Meta, like Google, Apple, a little bit lower. And also, by the way, now we just from its high levels of this of the end of this 2021 down 20%, but still I think that the stock market now is very expensive, and so just I'm not heavily buying IT companies. Let's have a look on the Fed fund rate, on the projections. So we will have in 12 days another meeting. The expectations for it, look, now the current rate is 5%, that there is no doubt that 84% the Fed fund rate will be hiked another time. It will be 5.25%. It will be in May. And let's have a look, for example, the expectations for the end of this year, that we may see also very high interest rate, about 4.75% and let's have a look also the summary all of this the expectations. So look, now we are here, so most probably we may see another hike in 12 days, but then, for example, at the end of the year we most probably will see still interest rate about 4.5%. that it's a lot of interest rates for many companies. Very hard to pay such high interest rates to banks, and here still till the end of the next year we still see interest rate about 3.25. so in our mind the next few years we may see interest at levels of 3 to 4%. And of course, for the stock market, when the interest rates are high, it's very hard to show a strong and nice performance. Also, I would like to show you my portfolio. This video with my 4 assets you can find in my channel. It was the end of 2022. So look, here 3 assets: the TLT, the ETF on the US Treasury, Bitcoin, Amazon and Disney. So the position in Bitcoin closed at 28,000 and took 69%. Also the TLT, but also the TLT, by the way, has a dividend yield. It pays dividend monthly, so here it's a little bit higher. And Amazon and Disney also giving me a nice plus. So generally speaking, my total performance since the beginning of the year is 26%. The S&P 500 is only 7%. So I'm outperforming the index, the main index, by these figures. So by 20%. In average last month. So I think look, now it's the 21 of April. So if I earned 26% in 4 months, I think it's nice. It's very, for me it's very cool. It's very good investment. So we'll see. But Amazon and Disney still hold my portfolio. It's, by the way, Amazon up 21% since the beginning of the year, but it's not that the performance of Amazon is such strong or such crazy. It's just the lower base of the last year. It's a very strong crash of Amazon. But generally speaking, it's my portfolio performance for today. Let's have a look on DXY, the US dollar index. So here it's 101. I told you that the highest rate most probably it will be in 12 days, but then the Fed may start, or it will be a pause in hiking, or just may start to decrease its interest rate. Then of course the US dollar may start to become weaken and weaken. Then of course the XY will decrease. So my target is about 92, 93 through a few years from now. So I think it's very close. My forecast, my projection to what we see now. So generally speaking, I'm see it lower than 100 points toward the end of this year. And the TLT, the ETF on US Treasury bond. So here, as I told you, I have position in my portfolio. It's up about 3% since the beginning of the year, one of the safest asset in the whole market. And of course, when the interest rates up, so this asset, the US Treasury, is decreased. But then we may see a switch when the Fed fund will start its decreasing. So of course then it can be a spike and a very strong bounce in the TLT. And also don't forget that dividend yield is now 2.7%, and of course the dividends payments here are monthly. So for me it's also very convenient. And let's have a look at AT&T with the ticker T. So yesterday we showed it decreased, this company stock decreased more than 10%. It released its quarterly report. The quarterly report quite disappointed investors and traders. So look, now if we'll check the it chart here, there is still the fourth wave. And telling you the truth, I sold half of its company shares in my portfolio, because for me I didn't like the quarterly report. Now of course we look at more closely, but now the dividend yield is more than 6%, but there is a very high, not high, there is a quite high probability that the company may cut its dividend payment. And now I will tell you why. So it's the quarterly report, investor update. It's the 20th of April. So look here, there is a nice slide. The revenue is actually the same year to year, but here very important, it's the cash flow operation. It decreased year over year. It was 7.6%, and for the last quarter 6.7%. And also please pay attention to the free cash flow. It's usually from free cash flow the company pays dividend. If 1 year ago it was 2.8 billion bucks, for the last quarter it's only 1 billion bucks. Also we have explanation here. So free cash flow of $1 billion reflects seasonality, capital investment, the cadence and timing of working capital, including 1.3 from direct TV, capital expenditure of more than $4 billion, and of course capital investment. Generally speaking, the main problem here that free cash flow of $1 billion, it's in my mind it's very low. But let's find how much the company is paying as a dividend payment every quarter, and then of course we can decide if it's a high figure or not. So let's find out this data. Usually in the cash flow statement, it's cash from financial activities. It's a quarterly data, yeah, it's here. So total cash dividend, we see $2 billion last quarters. Yeah, usually the company pays as a dividend. We saw that it's only $1 billion as a free cash flow, so most probably we may see really that the company, very high probability the company may cut its dividend payments. By the way, now the dividend yield is more than 6%, so yeah, it can be a serious problem. And also please check here, the debt to EBITDA ratio is very close to 7, so it's a lot, it's very high. Usually if the this parameter is supposed not to be higher than 3, but here the debt to EBITDA ratio it's 7, it's very high. Interest coverage is not so it's not so high, it's generally it's okay, but still elevated. But also another parameter is Altman Z-score, but here also parameter Altman Z-score is the probability the company may default in the future years. It's supposed to be at least 3 or 4, but here it's less than 1. So the financial strength, financial stability, the general market rank is only 3 from 10. And of course the EBITDA ratio is very low, and the company has a very severe amount of cash. The cash amount relative to its debt is of course very low. We may see it here. The cash to debt ratio is very close to 0. So another problem. Of course the company has now, the amount of debt is now 154 billion bucks, and the interest rate now about 5%. So it's a lot of interest payments, a lot of interest. Of course it's supposed to pay interest on the debt, so I think that can be another problem for AT&T. So generally speaking about AT&T, I like this company a lot. Great company, very huge, the dividend payment very nice, but now with quarterly report very weak, and the free cash flow is disappointing. Personally, me, $1 billion per quarter. The company should pay at least $2 billion as a dividends, and of course now the interest rates in the whole market very high, and by the way, let me check the marginality. Yeah, we see that net profit margin is only 14%. So I sold half of my position in this company, and maybe I will replace it in some other company, some other dividend king or dividend aristocrat. But now for the next quarter I'm believe in this company, in AT&T, less and less. So if you're interested in the stock market, if you like dividend investing, if you like technical and fundamental analysis of the stock market, don't forget to subscribe to my channel. You may press the like button, and of course see you on the next time. Bye.